InvestorIdeas.com podcast.
Good afternoon and welcome to another episode of InvestorIdeas.com Podcasts. In today's podcast, looking at a few public company announcements from DELC Holdings Incorporated, trading on the CSE as DELC and the OTCQB as DELCF. Also looking at CWEB Holding Incorporated, trading on the TSX as CWEB and the OTCQX as CWBHF. As well as Namaste Technologies Incorporated, trading on the TSX Venture as N and the OTC as NXTTF, as well as Kronos Group Incorporated, trading on the NASDAQ and the TSX as KRON. So first today, starting with DELC Holdings, a psychedelic wellness-focused company who announced it's executed a definitive share purchase agreement to acquire all of the issued and outstanding shares in the capital of Complex Biotech Discovery Ventures, or CBDV, a licensed psilocybin and cannabis research laboratory focused on extraction, analytical testing, and chemical process development. Now, it's founded by an award-winning chemist, Dr. Marcus Rogan, and UBC professor Glenn Samus, and CBDV supports the psychedelic industry with high-precision chemical analytics and metabolic identification. Following the transaction, CBDV expects to change its name to DELC Labs. A couple of the transaction highlights. The acquisition of CBDV will further establish DELC as a diversified psychedelics organization, and it'll allow DELC to add scientific-based research and analytics to its product offerings, building on intellectual property, enhance exposure of CBD to drive growth. DELC expects to drive customers to CBDV through its medical platform, which will allow CBDV to expand its current customer base and potential product offerings. Now, Matt Stang, founder and CEO of DELC, commented, "Joining forces with CBDV is a foundational transaction for DELC. Science and research is the backbone of the psychedelic renaissance, and adding the talent, know-how, and experience about CBDV will bear fruit both now and in years to come. The fact that the company has a world-class team, history of profitability, more than 50 blue-chip clients, and is on track for significant growth makes it a compelling acquisition for DELC, and one that makes it a pillar of the company. Going forward with the discussions we currently have in place with the many entrepreneurs worldwide within the DELC ecosystem, we see an opportunity to potentially commercialize this science in the near term." So now CBDV is one of the handful of licensed research psilocybin labs in Canada and has an aggressive plan to build out a suite of novel compounds and delivery methods for the industry. And the company is also a leading cannabis analytical and research company boasting clients that include some of the largest brands in the world. And now CBDV intends to apply for its dealer's license to eventually commercialize its psilocybin research and associated IP. And Dr. Rogan, CEO of CBDV, stated, "This is a very exciting moment for us at CBDV. Partnering with DELC was an easy choice, and the combination will allow us to use their platform to share our findings with the psychedelic and medical community, while also gaining new clients in the cannabis front. And it's a great opportunity to work in tandem with the DELC team to help these new age treatments become accessible for all." More acquisitions within the psychedelic space, very reminiscent to what you saw in the first couple of years of cannabis legalization, where you're seeing some of these small companies partner together to sort of consolidate their efforts and gain a little bit of a leverage within this nascent industry. I do think that focusing on having advanced research when it comes to psilocybin and kind of as much IP property as possible is going to be important within that psychedelic space. It's going to be interesting to see who's going to really sort of separate themselves in that industry so far. So far, everyone does seem to be at around the same sort of pace. But I would expect to see a few more sort of smaller acquisitions or joint partnerships along these lines, again, as this industry continues to gain more momentum and a lot of these companies start to see that similarly with cannabis, going the sort of vertically integrated route is quite costly and quite difficult at the start, as opposed to, again, either acquiring smaller niche market companies or partnering with them for future sort of assets. Looking next at CWEB Holding, who today announced a long-term scientific collaboration between McLean Hospital, a Harvard Medical School affiliate, and the company, and funding the product support are provided by the CW Labs division of CWEB Incorporated. So two distinct clinical trials will be overseen by lead researcher investigator Dr. Stacy A. Gruber, PhD Associate Professor of Psychiatry at the Harvard Medical School and Director of MIND program at McLean Hospital in Belmont, Massachusetts. Now, these two studies will investigate the efficacy of a custom-formulated hemp-derived high CBD product and clinical trial results are to be published by 2022. Dr. Gruber is also conducting a number of other studies, including a longitudinal observation study of veterans who use Charlotte Web's products. Now, Dr. Gruber's marijuana investigations for neuroscientific discovery from the MIND program, established in 2014, is the first of its kind and is dedicated to studying the long-term impact of cannabis and cannabinoids for medical and adult use, which utilizes various clinical and cognitive tools as well as a multi-module neuroimaging techniques. We're honored to be working with Dr. Gruber, Harvard Medical School, and McLean Hospital on one of these important clinical trials, said Tim Orr, president of Charlotte Web's CW Labs division. Charlotte Web's remains dedicated to supporting third-party research on hemp CBD investigated by some of the country's top scientists. So not really anything that new for Charlotte Web's holdings. They have been one of the companies that's used for the majority of these sort of research studies in the U.S. I do like that they are focusing on long-term studies, though. I do think that that data is going to be equally important when you're looking at expansion of the CBD industry as well as of the general cannabinoid market. There's been a lot of short-term studies. There's a lot of short-term medical studies that have gone out there, but as far as long-term exposure to cannabinoid medicine, especially at higher doses, there isn't a lot of data or evidence out there that's not anecdotal. I do somewhat agree that it seems somewhat unnecessary with CBD at this time, as we have had a lot of people exposing themselves to these products for a couple of years now at very high doses in a very unregulated market. Hasn't really been any adverse side effects, and there doesn't really seem like there will be. But hopefully they could have some more positive results from these studies where they show what the benefits are of long-term exposure to CBD or to certain cannabinoid products, and even what kind of improvement rates you can see over years versus just short-term exposure. So obviously these CBD products have been proven to be quite effective as different medical applications. That being said, they haven't shown to be how effective they can be over a period of maybe 5 to 10 years, and also what kind of overall changes in efficacy and sort of the consumer's tolerance that can happen over the course of maybe 2 to 3 years if they need to increase dosing by a much higher level. If not, that would be another very positive feather in the cap of the CBD industry, is that you don't need to increase dosage. That is what most of these companies have shown so far, but again, hasn't been as validated as the medical community would prefer. Next, looking at Namaste Technologies Incorporated, who announced that Canmart.com is now live in the USA, offering Americans hemp-derived CBD and smoking accessories. And Namaste is excited to be leveraging its vendor-linked technology in collaboration initially with Dankstop and Peach Birch Logic Incorporated, and looks forward to adding more partners to the platform. Now, the announcement of this expansion into the U.S. underscores Namaste's intention to increase its total addressable market and exploration into other verticals and geographies as regulations evolve and as other adjacent complementary market opportunities present themselves. With ever stronger signals that the regulatory landscape in the U.S. is evolving, our entry into this jurisdiction through the sale of hemp-derived CBD and accessories will position us strategically to begin capturing new market share and building a first-mover advantage when cannabis becomes legalized federally, said Manny Morum, CEO of Namaste. And this development also further validates our investment in technology, as the expansion will facilitate it via our marketplace technology. And we look forward to building on this positive momentum as we continue to execute our strategy to position Namaste as a leading global cannabis and wellness company. So Namaste now entering into the U.S., selling CBD and accessories. Very in line with what you've seen from a lot of these companies based out of Canada right now, is focusing on having some sort of entry point into the U.S. market, so that way they can establish a bit of a foothold for when regulations do open up. Obviously, CBD sales not going to be an issue within the U.S., and selling accessories even as well. When it comes to U.S. accessories market, because it is still federally regulated, there's a lot of difficulties with online sales and shipping. A lot of packages still get seized, and also the price points for a lot of these companies selling these accessories online in the U.S. are pretty staggering when compared to in Canada or even other parts of the world. So I do think that they'll probably see pretty aggressive sales through just the accessory side, and then again, CBD isn't going anywhere anytime soon. So definitely something to pay attention to for Namaste. I think it's a smart move, having CanMart involved in the U.S. early, and it'll be interesting to see how that develops as regulations do change over the next couple of years. Lastly, today, looking at Cronos Group Incorporated, who announced its 2020 fourth quarter and full year business results. Our fourth quarter 2020 results are the summation of hard work and perseverance that the company has put into this past year despite the challenges of 2020. As we look into 2021, I'm incredibly excited about the teams that we have supporting our brands and the breakthrough research and development, innovation, and exciting marketing campaigns Cronos Group plans to execute on. We are poised to build upon the growth we experienced in 2020 as we continue to push cannabinoid innovation and differentiated product offerings under our portfolio of brands, said Kurt Schmidt, President and CEO of Cronos Group. Now, my goals this year will be to focus on building a winning team by fostering a collaborative, performance-driven culture, continue to focus on creating disruptive technology and innovation, grow and develop our brands, and strengthen our ability to compete through R&D, strategic global infrastructure, and engaging in the legislative process in key markets. So you can check out more of the details of the financial results for their fourth quarter and the full year 2020 below, or in the link attached in the article. Nothing overly surprising. They did see the same sort of increases that almost every company saw within the cannabis space over the last year. It's still some increases in revenue, generally a decrease in costs, and overall an improvement in efficiencies. It is interesting to note that they had more success in their U.S. market than they did specifically in the Canadian market. They've definitely slowed down on their Israeli medical market, but that does seem to be something that'll be put into gas probably in 2021, as there is expectations of recreational within the next year in Israel, as well as probably one of their biggest sort of difficulties was inventory write-downs. That has decreased over the amount of time, but still is an issue for them as pricing pressures in the marketplace continue to be a problem for some of these companies. And that's another thing to pay attention to if you're looking at the Canadian-based LPs right now, is, again, now you're starting to see price become a much bigger factor for a lot of these LP success and overall profitability. And it's going to continue to be, and this is why I've kind of said since the beginning that looking at some of these more craft-based setups where it's more of not necessarily a co-op, but to some extent, yes, where you have a combination of small craft growers all working under one enterprise. They can compete much more aggressively with cost. They can expand much quicker, and the product quality that they're producing tends to be of a higher caliber than some of these large-scale grow operations. The difficulty becomes you're really putting all your eggs in one basket as far as the overall reception of your product that you're going to be bringing to market. If you have 20,000 kilograms coming from a single production facility, maybe only one strain or two strains in that facility, all grown in uniform fashion, it's very easy for problems to occur versus having a large amount of small grow operations. Again, if one of those grow operations gets contaminated or doesn't hit its THC or CBD quotas or just can't be sold to market for some reason, you're not as hit as heavily as if you are with a 1.2 million square foot facility or something along those lines. So I do think that you're going to continue to see that a lot of these larger scale producers start looking at divesting some of their assets and maybe start partnering with some of these craft growers, as many of them have been doing. And again, even when you look at a Canopy and Aurora and Afria, almost all of them, a lot of their biggest successes have come from their smaller brand partnerships and their sort of niche market opportunities as opposed to just the overall large scale sales. That being said, they're not selling that cannabis at large scale, but again, the issue is becoming these price points, these inventory write-downs, and the overall percentages of profitability that you're making off that large scale production versus off the niche craft growers. That's all for today's podcast. Enjoy the rest of your weekend. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.